Good evening, folks. This is Andy Pedraza with Special Effects Academy, and we're on the open session for the week on April 12th of 2020. We'll go through our usual agenda. I'll look at the prior week's results, our currency strength meter for the past 37 days. Fundamental announcements on the calendar for this week, a look at the major pairs on the daily charts, any setups we see in progress, and a few words in conclusion. Starting agenda, did have one trade close out last week on the long-term ledgers, so we are up by about 5% from the beginning of the year, and we still have the same number of trades open as we had last time. We did get taken out of EURCHF, and we reopened that trade almost immediately after, so it was almost instantaneously replaced. Well, we did take profit on a pullback that the EURCHF suffered that day. On the intermediate term ledger, we are about 3% worse off than we were last week, but we have open trades at profit, so that number is a little bit deceptive. We've got quite a significant amount of open profit on the trades that were finally opened this week, those that you see in the red square near the bottom. So that number is probably going to change to our advantage as soon as some of these trades close out, which again, we're not in any hurry to see them close out. We'll just let them run their course. So long as they are moving in our direction, there is no rush to close them. On the short-term account, we had an up week by a little bit over 1%, which was exactly the percentage loss of the prior week. So the account is right now at break even as we go into the third week of our fiscal year. So the balance is pretty much what we had at the beginning 2 weeks ago. So no significant change, but it was an up week for us. Notes and opportunities for improvement. The week last week did start out very sideways, but it picked up towards the end. So Thursday, Friday, we had some pretty good moves, just counting pips. Coronavirus is still the only factor, with perhaps a side helping of oil. We're going to see when we look at the oil prices very shortly that we do seem to have reached the bottom. Wednesday into the weekend, there were OPEC meetings, and there is a quota that has now been established as regards production in the hope of giving oil a floor. So significant cuts coming in the production of oil from the main countries are Russia, Saudi Arabia, and all of the smaller members of OPEC signed up, but the big hit is going to be Russia and Saudi Arabia, which were having a feud in the background as regards that neither one of them wanted to lower oil production at this point in time. So pressure from the United States, they have agreed to reduce production. I think the number is 10 million barrels. Either way, it's about 10% reduction in production of oil. It's not really clear if that is going to result in an increase in oil price, given that demand is almost at zero right now. People aren't traveling, they're not getting in their cars, so oil is down, significantly down. Gasoline, in fact, I filled up my tank on Friday or Thursday, and it came out to about 140 something a gallon, which is ridiculous, insane prices we hadn't seen since about 20 years ago. So we'll see what happens with oil, but they are taking steps to try to halt the decrease in price. And of course, I'll keep repeating this, our live event is going to be rescheduled. Not sure when until we're past this coronavirus crisis. It will likely be still in 2020. It will still be in Wilkes-Barre, Pennsylvania. And as soon as I have details, I will be communicating them. Our relative strength meter, and I decided to add the chart for last week, despite the fact that the website is still giving me an error. So if we look at the 30-day chart, volatility was at about 12% overall, with the big winners being the metals, silver and gold. The Australian has recovered significantly over the past month, as has the pound. Losers have been the CAD, the Swiss, the euro, and the rest of the currencies have been pretty middle of the pack. Now, if we look at the week that just ended, we see that the website is still glitching and giving me percentages in the millions. So obviously that chart is wrong, but I figured I put it in there as a placeholder for the time being. Volatility for the week probably came in around 4 to 5%. All things being considered, it was a relatively slow week, more sideways action than anything else, except towards the end. Fundamental announcements for this week to come: a very light calendar. We're going to be having interest rate decisions interest rate decision, singular, out of Canada on Wednesday. And that same day, we will be having the employment numbers out of Australia in the evening. Both of these will be live, so check for those on the schedule. And with that, we move into the charts. As I mentioned, oil seems to have bottomed out the last time it did at around 1750. That was the extreme push a couple of weeks back. We saw a bit of a recovery as it became clear that OPEC was going to be meeting and trying to resolve something. Went all the way up into the 27, 28 range before crashing back down to the low 20s where it ended at the end of last week. So now that we have a reduction in production out of OPEC, an agreement, we'll have to see how oil reacts to that. We did not have an oil market open on Friday on account of it being Good Friday, which, by the way, happy Easter, everybody, or happy Passover, whichever one you celebrate, or happy Sunday if you don't celebrate anything. So we'll have to see how the markets open well, they should be open already for the Monday trading on oil. So I'll be very eagerly keeping an eye on oil prices to see what, if any, effect the OPEC deliberations have had. Moving on to the currencies, euro dollar went up, so we can see dollar weakness coming back into the market. Not too significantly yet. It looks like the market is more testing the waters than everything else. And the bigger movement happened towards the end of the week. We'll have to see if it continues. My opinion, and that's all it is, one man's opinion, is that the dollar is going to have significant weakening in the weeks to come. We'll have to see if the market agrees with that. And of course, we will be looking for price action before we actually take any trades in either direction. I am agnostic when it comes to the market. I always have an opinion. Who doesn't? But I do not trade my opinions. I trade whatever the market is doing. Pound dollar, and this is going to be something you will see in all the dollar pairs. They are all moving into dollar weakness, but not in any significant fashion. They're going back up to prior levels of resistance, and we're still waiting for a breakout to give us one of those bigger moves that you can see in the recent past. We had some very good moves on all these pairs, and of course, we're looking for the same to take advantage of them. If the market continues sluggish as it is right now, well, we'll still be making money. It just won't be spectacular amounts of money, but the bigger, better times will come again. USDJPY, more sideways than anything else. We can see that it moved into yen weakness towards the beginning of the week, but then the market turned around and it did end up significantly below where it had started, again into dollar weakness, which, as I said, is the norm. But you can see that an amount of movement that it had compared to what it's done in the recent past was relatively mild. USDCAD, more of a steady mover. So this one is one of the exceptions. It did move into dollar weakness, so not an exception in that sense, but it did have more of a decent move, a couple of hundred, maybe 300 pips all told from the beginning of the week towards the end. This is one where I'm very eagerly waiting to see if it does break that level of support it's sitting on right now, and we have the beginning of a bigger move. It has to breach that 139.50 where it is right now. This one will probably be helped by any improvement in oil prices, as the Canadian dollar is strongly correlated to oil prices. USD Swiss also moving into dollar weakness, big surprise, but again, not yet close to the prior low, which is still a couple of hundred at least. We're already short on the USD Swiss. We're carrying profits, so we went in a little early on this trade. We'll have to see how it continues playing out. Aussie dollar, same thing, dollar weakness, but it has broken out of prior levels of support. We're already trading this one as well and carrying quite a nice chunk of profit. I think this is our biggest on the long-term account right now. And again, we're looking for it to continue into a recovery to prior price ranges, somewhere around the mid-60s, high 60s, where it seemed to have trended for the better part of a year before the breakout occurred that knocked it all the way to the bottom. So this one's probably going to have some good potential. Same thing with the Kiwi dollar, doing the exact same dance, so it is breaking out of prior levels of resistance, and we would hope that it does go towards the top. We already have open trades on this one as well, so that would be a pretty good opportunity right there if it plays out. Aussie Canadian breaking out as well, and we're trading this one. We opened it only recently, so it's not carrying a whole lot of profit. But it is moving steadily in our direction, so not a bad thing. We have that breakout towards the top, and again, I'm looking for a return to prior price ranges near the low 90s, basically, on this one. Euro Swiss, we're still in a short position on the intermediate, looking for a break of the bottommost level of support. It has been trapped in a sideways range for a while now, since at least mid-February. So we're still waiting for the breakout towards the bottom. I'm not going to be giving up on that trade until it does break out above and takes us out, or it does fulfill and breaks the bottom. It could still go either way. Euro pound, another trade we have open at a nice level of profit. It is breaking support as we speak, and if all goes well, we may see a trip all the way to the bottom. No rush on any of those trades, so long as they're moving in our direction. EURGBP, we haven't traded for a while, and you can probably guess why. It looks like the EKG of somebody having severe heart issues. So it's just moving in both directions, sometimes in the same day, which is obviously not conducive to good trading. So we're passing on this one. We have been passing on it for a while. We'll be back as soon as it shows a little bit more consistency. Euro Canadian, we took a nice chunk of profit on the long-term account on this pair. As it retraced on Thursday, it took us out, and then that same day, I think we re-entered the trade. It's pretty much a break even, maybe carrying a little bit of profit. And again, this is another one where we can see that the price range was all the way at the bottom very consistently for a long period of time. When we have these breakouts, they tend to return to prior levels at some point. So that is the basis of that trade. And well, no change. We're trying to ride it all the way to the bottom. And if it takes one trade, if it takes 20 trades, doesn't matter. That is the preferred direction. Pound JPY trying to break out towards the top. I haven't put any money on this one yet. I wasn't too convinced, but at this point, if it does break that next level of resistance and starts going into the shaded area of the Ichimoku cloud, I will definitely put some money on a trip towards the top. If it does the opposite, it reverses, bounces off the cloud, then I will trade it down. I'm very, very agnostic on this one. This one is yet another one that could easily go either way. Aussie JPY breaking out towards the top. We have seen Australian strength, and we saw that in the relative strength meter at the beginning of the call. The Australian was probably one of the bigger gainers for the last 30 days. We can see that very clearly on this pair. If we continue to see Australian strength, and we're overdue, the Australian has been bearish for pretty much 2 years now, we might see a trip to higher regions, and this might be a good pair to keep an eye on. So this one is definitely on the radar. Euro New Zealand, another one attempting to return to prior levels toward the bottom of the chart, swinging very wildly. Some of these daily candles are 400 pips wide. So again, We've been on the right side and the wrong side of trades recently under Euro New Zealand. I've been waiting for it to break the current level of support before going in. Again, it's not conducive to proper trading when they're moving that wildly in both directions. There is no consistency, and it's a very dangerous pair to trade right now. But if it does give us a good signal, we will be taking that trade. Pound Canadian, very wishy-washy, went in both directions last week, basically ended flat, so we're still waiting for a breakout in either direction. And pound Swiss, pretty much the same thing. I've mentioned this for weeks now. It is trapped in a very narrow sideways band, and we're waiting for it to break out in either direction. Another one where I don't care which direction, I just need for it to break out and give me a proper signal. That's it for the chart setups in progress, and this has been a constant for the past few weeks. It is the coronavirus. There is nothing else going on the planet, in the markets, that matters as much as the coronavirus, its impact to every economy, and the reactions of every government as it attempts to deal with the coronavirus in very different ways. You go all the way from Sweden, where people are living life as normal. There is no quarantine. There is very little social distancing. They're not wearing masks. They're just going about their business. If they get infected, well, they'll go to a hospital. To places like England, where basically they're under lockdown and can be arrested and stuff like that if they peek out the windows. So the U.S. seems to be somewhere in between, with the aggravation that every state, sometimes every locality, every county has different rules, and you may drive 5 miles down the road and find you're under a different set of rules, assuming that you're even allowed to drive 5 miles down the road, or you're going to do it, or whatever. So that is the main factor right now, is the coronavirus, and well, until that ends, we're probably not going to be looking at too much other fundamental movement. And some parting words here, skin in the game. And I was reminded of this over the week. Somebody asked me how much money they should put into copy traded accounts managed by SFXA. And of course, the question was there is what is my risk? How much am I going to win? And I've explained this to them and to everybody before, but I always try to stress it, given half a chance. There are no guarantees in trading. This week could be a losing week. It could be a winning week. It could be a losing year, a winning year. You never know. You should never put any money in the market that you cannot afford to lose. But that being said, I have a pretty good track record I can point to, and I haven't lost money yet. Obviously, I've had drawdowns. Some of them have been significant drawdowns in the neighborhood of 25% or so. But I've always recovered that money. I've never ended up losing money yet. But more importantly, I do have skin in the game. The accounts we show you here and in our daily trading, they're real money accounts. You can verify that. They're audited. They're verified. If I say I have $10,000 in an account, it's $10,000 real dollars. If I lose 20%, that means I lost $2,000 that day. It's that simple. I have skin in the game. I'm not trading your accounts. I'm trading my account, and you guys are following those accounts. So when I lose money, I really do lose money. When I win money, I really do win money. That is what it's called, having skin in the game. And this year, I did let the profits ride. So normally at the beginning of the year, I reset the accounts to their beginning balances. This year, I said, screw that. I've been talking about the benefits of compounding your money, and I'm going to let the profits ride. So if that's not a vote of confidence in me, by me, I don't know what is. So take that as you will. But if somebody who is acting in your behalf does not have skin in the game, that means they have nothing to lose. So the only ones who can possibly lose are you. Never be in that situation where you're trusting somebody who does not have skin in the game. As usual, I have this parting chart here where I ask all of you fine folks for any advice as to how to get the word out and help more people. Again, this is not about me trying to make more money selling my stuff. The bulk of my money comes from my trading and my investing. This is me trying to help more people out because it has been slow going. I have been getting quite a few signups recently. That's a good thing. But if I'm telling people that I can make them 100% a year, I'm just surprised people aren't beating down my door. So any advice you guys can give, any referrals you guys can give, I will be extremely appreciative. And do send me any suggestions, as always, to my email. And that is going to be it for me for this session. Do I have any comments or questions from anyone? Okay, folks, thank you very much. Have a rest of a happy Easter or happy Passover or whatever you're celebrating or not celebrating. And we will be back tomorrow at our regular time for Monday, 8 p.m. U.S. Eastern Time. Have a rest of a great weekend. Have a good one, guys.